Hi everyone and welcome to this YouTube video. Today I'm joined by a very special guest, Yves-André Graf, a custody specialist at Bitcoin Suisse. He's not only deep into the numbers behind Bitcoin, but also an expert on Michael Saylor's Bitcoin strategy, and trust me, you will want to hear his insight. Is MicroStrategy's bold Bitcoin playbook a genius move or a dangerous game? Let's break it down step by step. Let's kick things off with a fundamental but surprisingly confusing question. Who actually owns the Bitcoin held by MicroStrategy? Some people online seem to think it's Michael Saylor's personally, and others say it's the company or even the shareholders.
Thanks for having me. Let's take the example of a shipping company. If you own stock in a shipping company, do you own the cargo ship? No, not really. The best way to look at it is from a bankruptcy perspective. If the company goes bankrupt, they have to sell the equipment and whatever assets they can. And only after would they be able to pay the shareholders with the proceeds. As it currently stands, there is no redemption on strategy, meaning that you cannot exchange your MSTR shares for any Bitcoin. Therefore, as it is today, the company owns the Bitcoin, not the shareholders.
For those who are new to this, can you explain Saylor's playbook in plain English? What exactly is going on with MicroStrategy's approach to Bitcoin?
Sure. Let's take the Saylor analogy of the oil refinery, where it starts with the raw material, oil, goes through the refinery to make final products such as kerosene, diesel, or jet fuel. If we take this analogy a step further, Bitcoin is the oil, Strategy's balance sheet is the refinery, and the convertible bonds, the preferred equity, SCRK and SCRF, as well as the shares, MSTR, are the final products. It's just simple financial engineering, actually.
Okay.
They sell these financial products and buy Bitcoin with the proceeds. Thanks to Strategy's leverage and their commitment to keep buying Bitcoin, they have managed to create a premium on their shares, which allows them to buy even more Bitcoin through their at-the-money offering.
Nice explanation. Let's talk about mNAV. How does it work and why is it such a critical part of this model? And the big question, does this strategy ever end?
So the mNAV, or multiple to net asset value, is a valuation method based on the balance sheet. It expresses the premium or the discount on the Bitcoin held in the balance sheet. An mNAV below 1 means that the company is trading at a discount, and an mNAV above 1 means it's trading at a premium. As long as an mNAV is above 1, Strategy can continue issuing shares in an accretive way to shareholders, meaning that they will be able to stack more Bitcoin per share.
Is there a natural limit, or are we really talking about the infamous infinite money glitch?
So Strategy and the other Bitcoin treasury companies are arbitraging the markets and selling securities to buy more Bitcoin. They're just repricing Bitcoin compared to the rest of the market. In the long run, it ends when Bitcoin will eat up all or at least most of the fiat market. However, as so many new and incumbent Bitcoin treasury companies are flooding the market with newly issued securities, there might be saturation eventually. I expect this will most likely be cyclical and dependent on other macroeconomic factors, which impact global liquidity.
I really like your answers. And what happens if Saylor ever sells, or if there is a successor? Is there a post-Saylor risk?
Yes, absolutely. And that's part of the counterparty risk you take when you buy Strategy shares. There is even most likely a Saylor premium in the pricing of the shares, or the same way as you would have Elon for Tesla or Buffett for Berkshire Hathaway.
Now, let's take a look at investor profiles and alternatives. Who is this strategy actually for? Is it for long-term Bitcoin believers or more for short-term speculators?
So I think the strategy can be for anyone. As Strategy and other Bitcoin treasury companies come up with different types of securities, you will be able to construct many different portfolios. I would caution here, though, that not all companies will have the same risk profile, and not all will have the same meticulous execution that we have seen from Strategy or Metaplanet.
How does investing in MSTR compare to just dollar cost averaging directly into Bitcoin? What kind of exposure do you really get? And what do you give up?
MSTR allows you to get a lot more volatility, but it's, in my opinion, a much greater risk profile compared to Bitcoin. You get all the counterparty risks associated with it and more, in my opinion. The main aspect that you give up is the ownership of your Bitcoin. Self-custody of your Bitcoin gives a greater responsibility over it, but it gives you also freedom and empowers you as an individual.
Would you say MSTR is the Bitcoin of Bitcoin derivatives?
There I would say a hard no. Bitcoin plays on a league of its own thanks to its properties. MSTR has other very interesting competitors. I would mainly think of MetaPlanet, which outperformed strategy last year in terms of stock performance.
Let's take a step back and zoom out. Could Switzerland create the first company fully committed to Saylor's strategy? Do you think there will be demand for that kind of company here?
Yes, absolutely. I think that every market with its own fiat currency will have its very own Bitcoin treasury company. There will be demand in every market for such a product.
Now, let's shift to where MSTR stands in the broader market and its potential impact. In terms of exposure, where is MSTR already listed in terms of asset baskets and ETFs?
So according to the last quarterly earnings presentation, MSTR is already in about 500 different ETFs. Most notably, MSTR got listed towards the end of last year in the QQQ index. That's the Nasdaq top 100 companies.
Do you believe MSTR will be added to the S&P 500 this September? If that happens, what would the implication be for institutional exposure to Bitcoin?
Probably. If the Bitcoin price closes above 96,000, according to last calculations, at the end of June, they could be included in the S&P 500 because they already meet all the criteria.
All right, now let's talk risks. How does owning MSTR compare to just owning Bitcoin outright? What are the specific risks people need to understand when investing in MicroStrategy?
The main risk, as already hinted before, is the counterparty risk, which can include a change of strategy or financial engineering, causing unintended second-order effects to other securities that already exist. It can be regulatory issues if the authorities suddenly change their stance, even confiscation of Bitcoin by the government, and many more.
What happens if MicroStrategy can't repay its debt, or if we enter a multi-year Bitcoin bear market?
Well, strategy now has a few levers they can use, such as issuing more shares through their ATM, issuing more preferred equity also through their preferred equity ATM, or simply roll over convertible bonds forward. They could potentially also sell some Bitcoin as a last resort.
Okay. To wrap it all up, what do you think is the real innovation behind this strategy? Is this genius or just perfectly timed financial engineering?
So I think the innovation was to weaponize the balance sheet as a medium to cater to different investors that could not have access to Bitcoin in its simple form. It's genius, yet very simple.
And here's a fun one to close on. Why has no one ever applied this type of balance sheet leverage strategy to gold?
So this strategy would not work with gold because gold, unlike Bitcoin, can be mined at any rate. So the more the price appreciates, the more the miners are incentivized to mine even more, even if it costs more. So gold could appreciate in a short period of time, but it would quickly revert back to the lower prices.
Nice. Huge thanks again to Yves-André for sharing such sharp insights today. If you enjoyed this conversation and want more content like this, the best and only way to support my work is by subscribing to the YouTube channel. It means a lot and helps me keep bringing you quality interviews and analysis. So go ahead, hit that subscribe button. See you next week and bye-bye.